is winning over Bitcoin in 2025. Liquidity, trade, and trust. Despite ETF hype, central banks and asset allocators continue to choose gold over crypto for reserve and trade purposes. What to know? Gold has outperformed Bitcoin since the launch of spot BTC, rising 58% as Bitcoin fell 12%. Mark Connors says Bitcoin remains too young for institutional trust. While gold continues to benefit from established infrastructure and trade use, Bitcoin's recent slump reflects a global liquidity squeeze, not sentiment. With Connors pointing to U.S. Treasury spending delays as a key factor, gold is beating Bitcoin. BTC $90,650.93 this year, not just in price action, but in investor confidence. Since the launch of spot Bitcoin ETFs in early 2025, many expected a strong and sustained rally in the digital asset. But nearly 2 years later, gold has quietly outperformed, raising questions about whether Bitcoin is truly ready to rival traditional safe haven assets. While Bitcoin is down about 12% since the launch of the in January 2024, gold has risen 58% over the same period. 4. Mark Connors, founder and chief macro strategist of Bitcoin Investment Advisory, Risk Dimensions, and former global head of risk advisory at Credit Suisse. The answer is straightforward: not yet. Bitcoin is still too young, Connors told CoinDesk in a recent interview. The buyers that matter: central banks, sovereign wealth funds, large asset allocators. They still prefer gold.
Isn't just volatility or regulatory uncertainty, though those play a role. According to Connors, the deeper issue is infrastructure and historical precedent. Gold has centuries of trust and established financial channels behind it. Central banks already have gold accounts. Gold is used in trade. Bitcoin, by contrast, still sits outside that system. Some of these institutions haven't exactly called Unchained and said, "Can I get a wallet?" Connors said. They just aren't there yet. This distinction has become more visible as BRICS nations, including China, India, and Russia, have accelerated their gold accumulation. In some cases, they've even begun using gold to settle oil trades. That's a critical role that Bitcoin has not yet stepped into, despite its design as a decentralized, borderless currency. Bitcoin isn't being used for international settlement at scale. There's a trade component to gold that brings real demand, Connors said. Bitcoin doesn't have that yet. Bitcoin's price drop tied to liquidity, not sentiment. The gap in performance between Bitcoin and gold has widened in recent months. Bitcoin is down over 30% since its July peak. Gold, by contrast, has posted steady gains, climbing above $4,100 per ounce. Connors doesn't attribute this to a shift in sentiment alone. Instead, he points to a broader liquidity squeeze driven by U.S. fiscal policy. When the Treasury isn't spending, there's less money in the system, he said. And Bitcoin is hypersensitive to liquidity because of its leverage structure, especially in Asia. During the U.S. government shutdown earlier this year, the Treasury's balance sheet swelled from around $600 billion to nearly $1 trillion. With spending frozen, liquidity dried up across both traditional and crypto markets. But Bitcoin felt the pain more acutely. We're all on the same water table, Connors said. When the U.S. stops spending, it affects capital flows globally. The shutdown may have ended, but the Treasury hasn't fully restarted spending at scale. That delay, Connors argues, has left markets in a kind of limbo, especially risk assets like Bitcoin. A longer road ahead. The underperformance may not be permanent. Connors sees signs that liquidity could return to the market, especially if the U.S. government begins issuing more Treasury bills to fund deficit spending. He also believes that as trust in fiat currencies weakens, particularly in emerging markets, Bitcoin's appeal as a neutral asset will grow. Still, he cautioned against assuming Bitcoin will replace gold anytime soon. The comparison, he said, may be useful as a reference point, but it doesn't reflect how large institutions actually allocate capital. They're not flipping a coin between gold and Bitcoin, Connors said. They're choosing what fits into their mandates. and gold fits, Bitcoin doesn't yet. If anything, the recent divergence shows that crypto's path to becoming a global reserve asset may be slower than many expected. Not because the technology doesn't work, but because trust and habit take time to build. Gold's been around forever, Connors said. Bitcoin is still growing up.
Bitcoin pricing in most bearish global growth outlook. Since COVID and FTX crash, Bitwise research. Despite low sentiment and falling prices, Bitwise Andre Dragish says Bitcoin is trading as if a recession is imminent. While macro growth expectations are already improving, what to know? Bitwise Dragish says Bitcoin is pricing in a worse macro outlook than during the FTX collapse or 2020 COVID shock. The CMC Crypto Fear and Greed Index sits at 20, well above this month's extreme low of 10. Despite Bitcoin hovering near $90,000. The CME FedWatch tool shows that markets assign an 86.4% chance of a Fed rate cut in December. Supporting hopes for recovery, Bitcoin BTC $90,641.74 may be acting like a recession is imminent, even if the macroeconomic data suggests otherwise. In an X post on Friday, Andre Dragish, European head of research at Bitwise Asset Management, said that Bitcoin is currently pricing in the most bearish global growth outlook since the 2022 Federal Reserve tightening cycle and the 2020 COVID-19 crash. Drawing on macro survey data from sources such as Centix, ISM, and the Philly Fed, Dragish produced a chart comparing global growth expectations to the macroeconomic signals embedded in Bitcoin's price.
$19 billion liquidation that shook crypto. A historic $19 billion in leveraged positions vanished within 24 hours, exposing how macro shocks, leverage, and thin liquidity combined to trigger crypto's largest ever liquidation event. What to know? Over $19 billion in leveraged crypto positions were liquidated within 24 hours, the largest single-day event on record. Bitcoin, BTC, fell to $106,560, while Ether, ETH, and Solana, SOL, dropped to $3,551 and $174, respectively. Average token declines across CoinDesk Data's universe reached approximately 47%, surpassing the May 2021 crash, 41%. Perpetual futures open interest contracted 43% to $123 billion, led by a 57% drop on hyperliquid stablecoin USDE depegged to 65 cents on Binance, triggering secondary liquidations across LSDs, Altel 1S, and derivatives. SNX outperformed on event-driven momentum, while Pump and Drift fell 13% and 12%, respectively. Liquidity remains thin and fragmented, with capital still cautious and rotational flows yet to establish new market leadership. What actually happened? On October 10th, the digital asset market faced its largest liquidation event in history. According to CoinLast data, more than $19 billion in leveraged positions were wiped out within 24 hours. Bitcoin, BTC, $90,713.62, dropped to $106,560 based on CoinDesk's reference rates, CADLI, while Ether, ETH, $2,991.97, and Solana, SOL, $135.96, fell to $3,551 and $174, respectively. Several altcoins plunged by more than 75% within minutes.
Cryptocurrency market remains volatile but shows cautious optimism. With a total market cap hovering around $3.11 trillion, Bitcoin has pulled back from its October peak. trading near $91,000 after a 36% reset earlier this month. Amid broader deleveraging, institutional adoption continues to drive momentum, with U.S. banks like Morgan Stanley expanding crypto access and regulatory clarity improving in regions like the EU and UK. Here's a quick snapshot of the top famous coins, based on recent performance and market data, sourced from CoinMarketCap and CoinGecko as of late. November 2025. The cryptocurrency market remains volatile but shows cautious optimism. With a total market cap hovering around $3.11 trillion, Bitcoin has pulled back from its October peak, trading near $91,000 after a 36% reset earlier this month. Amid broader deleveraging, institutional adoption continues to drive momentum, with U.S. banks like Morgan Stanley expanding crypto access and regulatory clarity improving in regions like the EU and UK. Here's a quick snapshot of the top famous coins, based on recent performance and market data, sourced from CoinMarketCap and CoinGecko as of late. November 2025. Digital market famous coins. Brief update as of November 30th, 2025. The cryptocurrency market remains volatile, but shows cautious optimism. With a total market cap hovering around $3.11 trillion, Bitcoin has pulled back from its October peak, trading near $91,000 after a 36% reset earlier this month. Amid broader deleveraging, institutional adoption continues to drive momentum, with U.S. banks like Morgan Stanley expanding crypto access and regulatory clarity improving in regions like the EU and UK. Here's a quick snapshot of the top famous coins, based on recent performance and market data, sourced from CoinMarketCap and CoinGecko as of late. November 2025. DeFi trends on Ethereum. November 2025 update. Ethereum remains the undisputed king of DeFi, powering over 63% of the ecosystem with a total value-locked TVL exceeding $93.9 billion at 71% year-over-year surge. This dominance stems from its robust smart contract capabilities, developer ecosystem, and post-merge deflationary mechanics, which have drawn institutional inflows like BlackRock's Biddle Fund expansions. On-chain activity hit 2025 highs in August, with daily transactions nearing 1.92 million, 62% of which involves smart contracts in DeFi and NFTs. However, challenges like L1 congestion persist, pushing innovation toward Layer 2 L2 solutions like Arbitrum 10.4 BTVL and Optimism 5.6美元 BTVL. As of late November, Ethereum's DeFi TVL stands at tilde 115到120 billion, dwarfing competitors like Solana's $30 to $35 billion. Key trends shaping Ethereum DeFi.